So, you've heard the buzz. You've seen the headlines. Friends are talking about it, and it feels like everyone is getting rich off something called cryptocurrency. But what is it really? Let's break it down. Super simple. Imagine a digital version of cash. You can send it to friends, use it to buy things, or just hold on to it, hoping it becomes more valuable over time. The big difference is that there's no bank or government controlling it. Instead, it's run by a huge, decentralized network of computers all around the world. No single person or company is in charge. It's the people's money, in a way. This network uses a special technology called blockchain. Think of it like a digital notebook that everyone can see but no one can change. Every time someone sends or receives crypto, it's recorded as a block in this notebook or chain. Each block links to the one before and after it, creating a secure, unbreakable history of transactions. It offers transparency and security that traditional banks often struggle to match. Let's start with the OG, the one that started it all, Bitcoin. If crypto were the royal family, Bitcoin would be the king. Created in 2009 by the mysterious Satoshi Nakamoto, the very first decentralized digital currency. Its purpose, simple but revolutionary, let people send money directly online without banks, a true game changer for personal control of money. It's a household name, even grandma knows Bitcoin. What makes it special? Scarcity. Only 21 million will ever exist. No more can be created. It's coded that way. A deflationary asset, a digital form of gold. Limited supply plus rising demand. Price upside. Many investors treat Bitcoin as a store of value, a hedge against inflation. Bitcoin's strengths: security and network. The largest, most powerful miner network secures the blockchain, running over a decade without a successful hack. That history boosts investor confidence. If Bitcoin is digital gold, then Ethereum is like a global, decentralized computer that anyone can use. Launched in 2015 by Vitalik Buterin, Ethereum took the blockchain idea and expanded it. It wasn't just about sending money anymore. Ethereum introduced smart contracts. These are like regular contracts, but they are code that automatically runs when conditions are met. For example, you could create a smart contract that automatically releases payment to a freelance artist as soon as they deliver their work. No lawyers, no banks, just code. That capability is what makes Ethereum powerful. It lets developers build decentralized applications, dApps, on its blockchain. Think of it like the App Store, but decentralized. Instead of apps on a single company's servers, they run on thousands of computers worldwide. This sparked innovation in areas like decentralized finance, DeFi, lend, borrow, earn interest on crypto, without a bank. It's also the backbone of NFTs, non-fungible tokens. Artists, creators sell unique digital items directly to fans. Ethereum's main difference from Bitcoin is purpose. Bitcoin aims to be a store of value. Bitcoin aims to be a new form of money. Ethereum aims to be the foundation for a decentralized internet, Web 3. Now let's talk about Cardano, the crypto project that takes a slow and steady, research-first approach. Founded by Charles Hoskinson, also a co-founder of Ethereum, Cardano aims to be a more sustainable, scalable version of what came before. Think of it as the academic, peer-reviewed blockchain. The team spends huge time on academic research and formal verification. Their motto, measure twice, cut once. That discipline aims for a more secure, reliable platform. Cardano's big selling point, eco-friendly design. Bitcoin and Ethereum use proof of work. Proof of work consumes massive electricity. Cardano uses proof of stake. Proof of stake uses over 99% less energy. The vision is solving real-world problems, especially in developing countries. Projects in Africa, digital IDs for students, bank the unbanked, provide financial services, provide identity solutions, social impact over pure finance. ADA is used for transactions and for governance participation. Main criticism, slow development pace. Smart contracts arrived much later. Critics once called it a ghost chain. Now the ecosystem is growing steadily, with DeFi projects and dApps gaining traction. Investing in Cardano is a bet on a slow, methodical, scientific approach to build a robust, long-lasting platform. If Cardano is the slow and steady tortoise, then Solana is the lightning-fast hare. Solana burst onto the scene with one major goal: to be the fastest blockchain in the world, and it delivered. While Bitcoin can handle about 7 transactions per second, and Ethereum can handle about 15 to 30, Solana claims it can handle over 65,000 transactions per second. That's faster than Visa. This incredible speed, combined with extremely low transaction fees, often less than a penny, makes it a very attractive platform for developers looking to build high-performance applications. Solana achieves this speed through a unique innovation called proof of history. It's a complex idea, but the simple version is that it creates a historical record of events on the blockchain, stamping them with a timestamp. This allows transactions to be ordered and processed in parallel, much more quickly than on other blockchains where they have to be processed one by one. This breakthrough enables Solana to host applications that require incredible speed. High-frequency trading platforms, decentralized social media, complex blockchain games that wouldn't be possible on slower networks. Because of its speed and low cost, Solana quickly became a favorite for NFTs and DeFi projects that needed to handle a high volume of transactions. The user experience on Solana can feel seamless, almost like using a regular web application, which has helped it attract a large and vibrant community of users and developers. Its native currency, SOL, is used to pay for transaction fees and for staking, which helps secure the network. Alright, we've talked about the exciting potential, but now it's time for some real talk. Investing in crypto is not a guaranteed path to riches. It's more like navigating a minefield in the dark. The single biggest risk you need to understand is volatility. The prices of cryptocurrencies can swing wildly. I mean wildly. It's not uncommon to see a coin jump 30% in a single day, only to crash 50% the next week. This is not like the stock market. You have to have the stomach for these insane price swings. Never, ever invest more money than you are willing to lose. Seriously, I mean it. The second major risk is regulation. Governments around the world are still trying to figure out what to do with crypto. The rules are unclear and constantly changing. A new law in the United States, China, or another major country could change the game overnight. Governments could impose heavy taxes, ban certain types of coins. So, where does that leave us? Bitcoin, the king, store of value. Ethereum, the world computer, foundation for a new internet. Cardano, methodical, eco-friendly, research-driven. Solana, blazing fast, high-risk, ambitious. Each offers a unique vision and comes with its own rewards and risks. Which crypto will explode next? No one can answer that with certainty. If someone claims they know for sure, they're probably trying to sell you something. There is no single best cryptocurrency. The right investment depends on your personal goals. It depends on your beliefs about the future of technology. And it depends on your tolerance for risk. Believe in digital gold? Bitcoin might suit you. Excited about decentralized apps and Web3? Consider Ethereum. Value sustainability and research? Look into Cardano. Betting on raw speed and performance? Solana could be your pick. Understand what you are buying and why. Your homework starts before you put in a single dollar. Don't just listen to me or some random person on Twitter. Go to the project's official website. Read the white paper, the document that explains the project. Who is the team behind it? What problem are they solving? Is there a strong community already using it? The more you learn, the more confident you'll be, and the less emotional your choices. Knowledge is your best defense. Crypto is exciting and potentially world-changing. It hints at a future that's more open, transparent, and decentralized. But it's still in its infancy. Expect bumps ahead. It's a high-risk, high-reward asset class. Be curious, but be cautious. Start small. Only invest what you can truly afford to lose. Never stop learning. The crypto journey is a marathon, not a sprint. Approach it with skepticism and a commitment to education. Good luck.